So let's now talk about this global diversification. The data that my team has presented here should, be a wake-up call for a lot of folks. Let's dive in. So before we move forward, one more request to make you subscribe to the channel and do like and share these videos. Okay, so the most frequently asked questions that we get is which country has performed the best in the recent decade? Is diversification across different countries necessary? Is it safe to bet big on India? What if Japan-like situation happens in India? So to answer these questions, we've studied the performance of all major indices in the last decade. And these indices in this study are Japan, Brazil, India, US, Hong Kong, Germany, UK, China, Canada, South Korea, and Australia. And the most popular indices from those countries all have been normalized to USD terms. Uh, and to just add a small twist to it, we've also added gold to the mix in dollar terms, just to get some idea where it stands against all other indices. So the first metric that we want to see is the performance of all indices, which is indexed to 100 here in this chart. And you can blow up the chart if you like. Uh, and surprise, surprise, USA is the top country of the last decade, where 100 starting point has now become 286. So 186% gains in 10 years. Uh, the next item on this chart actually surprised me. Germany is up 137% in the last 10 years. You can say that, maybe from this point it has done well. Whatever it is, I mean, 10 years is not a short period of time. And 2015 was not an inflection point of any major sort. It was not like 2008 or 2020. So in general, I would not have expected Germany to be at number two. India is number three. We've gained 111%. Japan is number four, 174. So 74% gain since a decade. UK is number five. Canada, Australia, and you can see China and Hong Kong are at the bottom. I mean, Hong Kong is 85, so they've actually lost money in the last 10 years. China is also 88, actually lost money in the last 10 years. South Korea also has lost money in the last 10 years. Brazil has just about made 3% in the last 10 years, total 3%. So some of these numbers are really astounding. And while India has done all right, I would not have expected it to at least, I would have expected it to do closer to the US rather than get beaten by Germany here. And the joker in the pack is gold, which is up 199% in the same time period, the gray line that you see here. So very nice, interesting data. And if we see the year-wise ranking of all the major indices in a quilt format, you will find that, you know, if we see India, in some years India has been down, but you will find India is sort of in the top half of the chart. Um, what is also popping out is, of course, the US, which has almost always remained in the top half of the chart. Only in 2022 was it down for 19%. And if I were to see, let's say, gold has also been evenly distributed all over the chart. So it's not that gold has outperformed always, um, but only 4 years it has really remained in the top quadrant, for instance. So this um, basically is telling you that if you are betting on India, for instance, you need to have some diversifier to do well when India is not doing well. So 15, 16, India is at position 8 and 9, but Germany and Brazil are at the top. 17, 18, India is at the top, so no problem. 19, again, India is down. Then the next 3, 4 years is fine. In 2024, again, India is down. So some cross diversifier which can keep us, and these are all dollar denominated. So whatever India performance you're seeing is dollar denominated returns that you're seeing. So let's also now look at the CAGR of all these indices if we started investing 10 years back. So gold CAGR is 11.6%. We all know that. USA S&P 500 is up 11.1% in dollar terms. Fantastic return in the last 10 years. Germany is at 9%, and India is at 7.7%. Uh, is great when we compare it ourselves with China, Hong Kong, Brazil, etc. But not so great. I mean, if USA, Germany are able to do better than us. Japan is also very near us at 5.7%. So India has done all right, but nothing exceptional, I would say. So now answering the same queries, which country has performed the best in the recent decade? The answer is there: US and Germany. Is diversification across several countries necessary? Probably yes. Uh, India and US have had very good, mm, I would say lower correlation in terms of equity returns. I mean, if we go back to this quilt chart, you can see that, you know, India and US have stayed a bit apart. So whenever India is not doing well, perhaps US is doing well. India is not doing so well, US did well. US not doing so well, India is doing better. So there is some, certainly a lower correlation between the two. So that diversification looks good. And what if Japan like situation happens to India, or what if China like situation happens to India? So let's look at China, for instance. And you can see China's 4.6 here, minus 18% here, 13.7 here, uh, minus 28 here, and all that. Actually, if you look at this chart, China is this green line. It's really gone nowhere in this entire decade. So, was China not growing? Of course, it was growing. Was Hong Kong not growing? Of course, it was growing. But perhaps the flows towards that market were not there for XYZ reason. It could be geopolitical reason, it could be valuation reasons, it could be anything. Uh, so, can we say that India will never have that kind of a decade? It's difficult to say. I mean, I hope not, but can you? I mean, nobody can really ensure that. I mean, probably Germany had a decade like that, and then this last decade it has performed well. Or perhaps UK had a decade like that, and then it has performed like that. So anything can really happen. Markets can uh, basically jump much ahead of themselves in a few years and then go stagnant for the next many years. So that all can happen. So can such situation like China, Japan happen in India? Yes, it can happen. There is no doubt about that. In terms of the possibility, how can you bet or place your bets in that kind of a situation? You will need to diversify, and you will need to asset allocate. So also the big takeaway from here, as we saw in the chart, is that gold is the topper in this list. So imagine the pet rock, the useless investment that everybody calls out, has done better than all these markets put together. I mean, if that does not wake you up, I don't know what will. So this should tell us that gold as an allocation is a must to have some corresponding diversification for our equity. In even in China's case, even in Japan's case in 1990, if you go back and see those studies, and we've done many such studies, those investors who had asset allocation in gold, but the equity market did not perform for long periods of time, actually saw their portfolio still do all right because that hedge was there. And perhaps you don't need too much diversification outside of India. I mean, if you have India stocks, if you have, let's say, some US stocks, if you have gold, I don't think more than that is required, because your currency exposure also gets covered once you are in dollar assets or gold, which is the dollar denominated assets. So if you, like this video, and you want more, you know, uh, data on border diversification, you can watch this video that we did earlier. Can you just ride one asset class, where we've studied some more asset classes, and that will be a good learning for everybody. Do let us know in the comments your views on this subject. Thank you so much for watching. Do like and share these videos, and do subscribe to the channel. Thanks. Bye.